Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, May 12th, 4:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video, the Big Show edition, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market: large cap uptrend. Might be more appropriate to call it large cap tech uptrend. But if you watch our Titan 25 updates on Tuesday, there are 17 different sectors that comprise the large cap Titan 25, and for the most part, they're holding up okay. What's not holding up okay, obviously, KRE, that's regional banks, commercial real estate, mid cap, small caps, and now Dow lagging, also closing the week below its 21-day moving average, but bounced each of the last 2 days off of its 50-day moving average. You can check over here at the trend gauge. Leaders neutral, leaning bullish, and then we are at neutral, leaning bullish. That might be optimistic to say leaning bullish across our short-term 21-day, medium-term 50-day, long-term 200-day. Breadth continues to be bad. Nobody likes bad breath, right? And certainly the S&P and the tech-heavy NASDAQ 100, and honestly, it's the tech-heavy S&P 500, over 25% in tech there. They remain bullishly aligned above their short-term 21-day, medium-term 50-day, and long-term 200-day moving averages, while mid-caps and small caps have lagged for weeks at the Dow into a close below the 21-day. So what happened today? Well, not a lot. It was weak, just drifting lower most of the day, and then a trend up into the close, cut the losses substantially. Basically, the bottom line is we've been in a 6-day tight consolidation, but this could end up being something that's a problem for the market. The dollar broke out of a range to a higher high. We'll be watching this closely. In fact, it's going to be headlined in the title of tonight's video. So here are the closing numbers for Friday. Our RG7 Growth 7 Composite down 0.44%. The actually uh, three of the seven, maybe four of the seven, one, two, three of the seven finished positive, but ARK-K, which, believe it or not, had been showing relative strength, was down 3% on the day, as a bunch of the top 12 in ARK-K got hammered today. S&P 500 down 0.16%. We gapped up across the board, so kind of a disappointing day for bulls. Red close, but as I said, well off the lows. NASDAQ 100 took a break, down 0.36. Dow barely lower. Mid caps barely lower. Russell 2000 down 0.22. Global Diversified 60/40 stock and bond down 0.35%. Bonds across the board were sold off, which puts interest rates higher. In-house GROTECTION down 0.38%. Leaders took a break for the most part today. We'll go through the tail of the tape, the updated 21 over 21 list. Let's dive right into it. We'll start with the S&P 500. You can see after a very tight range yesterday, we had a wide range today. Let's go to the 30-minute chart, and you can see here is the tight range that I've been talking about, that we've been in for 6 straight days, basically 4,100 to 4,150. Tight range, just a little over 1%. Since this was the gap up on Apple earnings, and now we're just working it sideways. Since then, we expanded this and talked a lot about an expanded range that we're in the podcast, which we filmed early Friday afternoon. It's out on YouTube now. If you're on the email list, you'll get an alert tomorrow morning about that. But tight range, sold off, turn up on the 30-minute stochastic here. Let's go to the 60-minute. You can see the wider range. I'm not going to draw it. I'd spend enough time on it on the podcast, but got down near oversold on the 60-minute and bounced. That's kind of normal behavior. and a slight hook down here on the daily stochastic, but for the third straight day, an undercut and recovery of the 21-day moving average, which at this point is really just being used as a reference point. It's not, uh, well, that's not true. It did, if you look at a 5-minute chart today, provide a pretty key level. It's at 41.14, 41.15. It held the first leg down today. Then we had another leg down and we bounced and couldn't get back above it. Then we did get back above it. So yeah, it did play a pretty big role today. And good news, obviously into the close that we got back above it. So I said it didn't matter. It did matter today. And we have seen pauses around that range periodically this week. It basically set a low yesterday too. So let's move on to the Nasdaq 100, which had been leading the laggard on the day, but only down 0.36%, continues to grind higher along the ADMA. I swear if it breaks the ADMA, it's going to feel like uh, the end of the world is coming because of how strong these stocks have been. You can see the relative strength line here, very strong after being weak for an extended period of time. This happens all the time, and you're going to see the direct opposite here when we go to the Dow Jones Industrial Average. You can see the Dow leading on a relative basis. Now it's lagging on a relative basis, bounced at the 50-day moving average, stuck between the 50 and the 200. Let's go to mid caps. Continuing, you can really see this descending trend line along the tops. In fact, it's in a channel uh, going lower. Every time we come into the 21-day declining 21-day moving average is where we fail. That's been the case for the last 3 weeks. Let's go to small caps. Really the same situation. You can see trending lower, not as nicely a defined range as the mid caps, but more spikes because of, guess, stop me if you've heard this before, the KRE undercut actually finished positive on the day, didn't make a lower low. I guess that's a cause for celebration, but grinding lower along the ADMA. This has been the big drag since back here in the beginning of March. Liquidity issues, ironically, because they have too many long-term quality bonds on their books, meaning they can't keep up with the interest rates that T-bills are paying, and people are taking money out of these banks and buying government treasuries. So that's at the root of the problem, and it's not a good problem to have if you're a regional bank. Let's go to the VIX. The VIX tight range, lining up with the tight range and the markets below the 21-day EMA. That's a positive. Now the problem child. Breakout on above we've been riding the 21-day lower, a couple days above, but always failing ultimately. But the last 2 days, two gaps higher in the dollar and closing near the high of the range. If we put up a 60-minute chart here, you can very clearly see the breakout level. I could even draw it up here a little bit higher, but that was kind of being treated as an island top on the dollar. But here's the range. This was an island bottom. This was an island top. So maybe it's a false breakout, very similar to what happened here. If it's a false breakout, we're overbought. If it's a false breakout, well, overbought on the 60-minute. If it's a false breakout and we fall back into the range, that's going to be good for stocks. If we continue higher and we have room on the stochastic to continue higher, the next level up it's a pretty big move for a dollar, 1.6% higher. That would not be good for the indexes. A lot of resistance there, though. You can see this 2867 level over here corresponds roughly with the 200-day moving average. So more room for it to run. That would cause pain for stocks. If it's a false short-term breakdown and we get back into the range, that would be beneficial to stocks. Let's go to let's go to precious metals since they're closely tied. Start off with GLD. Gold down, but slightly, really hasn't broken down, holding the 21. GDX just had a horrible day yesterday. Couldn't regain any ground today. We stopped out of the rest of our position in this. Basically, the trade ended up being around break even. Got off to a great 3-day start, but as is the case with pretty much everything that's going on in this market, gains are short-lived. You better take them while you have them. Let's look at SLV quickly. Down to the 50-day moving average, and Bitcoin, which broke down earlier this week, uh, at least put in a hammer today around this 15 level, which, as you can see over here, is somewhat of a support level for Bitcoin. Now to bonds. Bonds sold off all day. That means, but it's after 2 strong up days. Still range bound, as are rates range bound, and that means rates were higher across the board today. The 2 up days on bonds were tied to good news on CPI, news on the inflation front from CPI and PPI, but gave back a lot of it today. Let's look at TLT. Here's the long term, down 0.84%. Let's flip to yields. The 30-year yield up 0.77%. The 10-year yield up 2%. I should say like 200 basis points, not a full 2%, but you can see trading range on yields. So that's it for the inner asset correlation. Let's go to the tail of the tape. You can pause it. I'll hit the highlights. A little bit of stochastics weaker than the week started, and I'm highlighting that dollar breakout. That is really a potential problem. Some news today. Consumer sentiment was weak when it came out at 10 a.m. This is one of the things that kind of moves the market, and we did sell off after this news came out. But like I said, rally into the close undid most of those losses. We're actually in a 6-day consolidation now. We're back to flat at the 8 EMA, but 6th day above the 21 EMA, although it is the last 3 days were undercutting reclaims of the 21. Our expectations stay positive as long as the S&P and the NASDAQ 100 continue to hold there, but breadth definitely a concern as it continues to be weak, and what we need is small caps and mid caps to participate in the rally. Breadth is always going to be weak when they underperform. Undercut and reclaim of the 21-day moving average on the S&P stayed in range on the NASDAQ 100, put in the high of the day early, but a nice trend up into the close. Where we closed at 41.24 on the positive. Now, First Solar made an acquisition before the open. Normally, the acquiring company sells off. It gapped up 10% and ended up 26% on the day. They put out a press statement about how this acquisition is really going to help them. It's a thin film company, help them get to their next generation of solar panels. I don't know all the details tied to this, but we will be reading about it because you can't ignore a 26% gain on 800% above average volume. That's the equivalent of any power earnings gap up that you'll see. So First Solar was added to the 21/21 list. XLP and XLU also outperformed on the day. On the downside, Bitcoin lagged. XLY, which is discretionary, lagged, and ITB home builders lagged with, which is typical when interest rates go up. And also, let's see, gold and silver. Well, GDX finished positive. The metals were mixed. So in-house, a couple of changes to the portfolio. We bought ELF. We'll talk about it when we get to the 21/21 list. We sold DraftKings, laggard, hit our stop. GDX, laggard, sold the rest of that. We trimmed some Lulu. Basically, when the market was showing weakness, we assessed anything that we were down on and just trimmed a little bit around the edges, but then added to Celsius into the close. Bottom line for today, SPX. That's the S&P 500. 6-day consolidation. Leaders arrested today. Dollar breaks out. We'll see what that brings us to next week. But now we are going to go into the 21 over 21 for the list. First, the four that fell by the wayside after a long run. GE coming off. Looks like it might be time for it to base after a nice long run, showing relative weakness rolling over on the stochastic. Las Vegas Sands, these casino stocks showed a lot of promise 2 weeks ago when they all gapped up on good Macau numbers as well as their earnings reports, but relative weakness coming in, broke below the 21, still above the 50. That's Las Vegas Sands GDX, also got punted. We talked about that already. And FedEx really never went anywhere. It was a proxy for transports, but that proxy is now broken below the 21 EMA. So those are the four that were punted. Let's show what was added. First Solar, look at this, 884% above average volume, up 26.48%. I think that this is heavily shorted if I'm not mistaken. I don't have that. Oh yeah, short interest. No, 3.4%, not that huge. Next, we bought ELF. We've been watching for this. Uh, got to where it was oversold, barely breaking the 21, but hanging on. Reclaimed the 21 today with the hookup on the stochastic. There's also a nice downtrend line here that it broke. They've got earnings. We can hold it for long enough to get into earnings, see if we can accumulate a gain into that, and we'll see how it goes. So ELF added to the 21 over 21 list, and also we own it. As always, if you got something red flagged over here, we own it. CMG, we bought this earlier in the week, riding the ADMA higher. AMD, we bought this last week, added it this week to the list. Pulled back to the ADMA today. It seemed like a violent pullback, was down 3 days at once, but hell, it ran up 20% in about 6 or 7 trading sessions on that news of its partnership with Microsoft. And the pullback was on below average volume relative to the big blue volume spikes that you can see on its way up. SMCI, those were the four that were added this week. So this SMCI moving tight sideways after its big earnings gap up. Shopify continued to run. Now time for a pullback. Beautiful volume patterns for the pullback. These two are both showing leadership quality, as well as Celsius with its big gap up this week. Tried to poke out this week. Market was just a little too much for it. Pulled back. All three buys right near this high volume close around the 128, 129-ish area. FAS, this goes up as XLF goes down. You can see it continuing to trend higher. Uber, so good that it's being hidden by the data boxes. Let's pull the stochastics off there. You can see just continuing to trudge higher. Great volume patterns, great relative strength after its big earnings gap up. They're developing like some sort of a super app that's going to tie in travel options also, as well as multiple, they've got the food delivery. I saw they've got some sort of freight delivery too. So Uber definitely eating Lyft's lunch. Intuitive Surgical sideways since its gap up. Microsoft continues to show strength sideways for the last 2 weeks now since its earnings gap up. DraftKings, we got stopped on this today, but it's still above. Nothing wrong with it. I mean, we did 2 buys on it, and we hit our stop, plain and simple. Nothing wrong with it, but when the market pulling back, you call your weakest, and this was the weakest. ITB continues to go sideways to up above the 21. Ferrari gapped up today, held the gap, acting great. Definitely not a recession for the uber wealthy. Mondelez continues to trudge higher. Lulu, we trimmed a little bit of this today on the pullback, undercut, but by the close, it reclaimed the 21 and the volume was light. ONON, earnings on Tuesday of next week. On Monday, we'll talk about how we're going to size our position into earnings. Wingstop continues to its upward momentum after pulling back, but bouncing off the 200 level. Meta, sideways, not showing the relative strength that Microsoft is, though, after its earnings gap higher. Lantheus hit the 100 level today and pulled back, but still very strong. And finally, NVIDIA, 2 days of a light volume pullback, continues to act great. And that's your 21 over 21 list. Remember, as I always say, it's not how much you make in the markets, it's how much of that you can keep. Why do I say that? Because if you're not careful and a bear market gets you, especially a severe bear market as you're approaching retirement, uh, you can lose so much of your nest egg that it'll just scar you. Our number one job is to keep this from happening to people. It's personal for us. We've seen family members get devastated. We've seen friends lose a ton of money as they're approaching retirement. And when the market rights itself, recovery's there, but you can recover from a higher asset base and that you didn't suffer through these massive drawdowns. If you're interested in this approach, reach out to us, Don at revereasset.com, or my partner, Dan Stewart, Dan at revereasset.com, or the phone is 855 Real Wealth. That's 855 732 5932. So the bottom line for the week, 6 days of a tight consolidation in the S&P, but that's under the threat of the stronger U.S. dollar. You know, Druckenmiller, um, Stan Druckenmiller, one of the greatest investors of all time, says his strongest position is a weak US dollar. That's what he's playing. I don't know why he thinks the euro and the yen are going to outperform them. I don't question guys that put up the numbers that he does, but I do know on the chart right now, the US dollar has broken out of its recent range and has some room to run higher. And in the short term, that could be a threat to stocks. So that's the focus next week, what the dollar's doing, how it's impacting the overall market. And with that, I'm going to wrap up the week ending May 12th. This is Don Vandenbord. Just the facts here from Revere Asset Management, telling it like it is every video. Stick with us to stay on the right side of the market. Thanks for listening and have a great weekend. And happy Mother's Day to all the fantastic mothers out there.